AMD cuts outlook and stock falls on second-half demand fears. Damned if you do, damned if you don't. Advanced Micro Devices, ticker AMD, yesterday made the bold decision to actually provide full-year financial guidance. That's more than you can say for most other chip companies. AMD arch rival Intel, Inc., withdrew its full-year guidance when it reported first-quarter results last week, citing the uncertainty amid the coronavirus crisis and the associated economic downturn. AMD, on the other hand, projected 25% revenue growth for the year, down from a previous forecast of 28% to 30%, but still impressive in the current environment. Amid a broad market rally on a potential treatment for COVID-19, AMD shares are trading lower on Wednesday. The concern over AMD stock, as was the case for Intel last week, is that robust first-quarter demand for notebook processors will fade in the second half as the economic downturn takes a toll. Consumers without jobs are unlikely to buy new PCs. And businesses cutting jobs aren't likely to buy as many PCs, and may try to stretch the lifespan of the equipment they already own. There's also concern that enterprise cloud spending could slow in the second half. That's all consistent with the commentary Intel provided on its call last week. Some analysts, like Instinett's David Wong, remain bullish on AMD shares. Although AMD trimmed slightly its full-year 2020 sales growth guidance, the company still expects full-year growth will be about 25%, and the full-year outlook implies, we calculate, an expectation of greater than 20% year-over-year sales growth in the second half of the year, Wong wrote in a research note. We think that, in an uncertain end-market environment, AMD is continuing to benefit from solid share gain momentum, which we expect will continue through the rest of this year. But other analysts came away with concerns about the second half. Northland Capital's Gus Richard maintains his outperform rating on AMD shares, but trims his estimates for the second half on concern about consumer. What has changed is likely the expectations of overall consumer demand for graphics and PC clients due to the economic impact of COVID-19, he writes. To be sure, AMD is benefiting from the uptick in corporate demand, but Intel will be difficult to dislodge from this market. Large corporations like to minimize the number of PC platforms they support and will be slow to switch from Intel to AMD, whereas consumers are far more willing to switch vendors and processors. The mix shift to corporate away from consumer will likely slow AMD's market share gains. While AMD's revenue growth is still outperforming Intel on an absolute basis, AMD underperformed expectations. Pierre Farag, an analyst with New Street Research, repeats his sell rating and $25 target price on the stock. He thinks the company likely lost market share to Intel in the first quarter, and that pressure on the company is likely to increase in the second half as Intel's recent supply constraints ease while demand slows due to the recession. Citi's Christopher Danley, who has a sell rating and an $8 target price on AMD shares, that's not a typo, remains steadfastly bearish on the company's near-term prospects. We expect a correction in AMD's microprocessor business driven by the recession and a price war with Intel, he writes. We expect strength in the PC and data center business to reverse during the second half as the recession takes hold and IT budgets are cut. In addition, we believe a price war with Intel will limit AMD's share gains and lower EPS. AMD shares were down 2.6% at $54.06 in recent trading. Intel shares, by contrast, are rallying 5.3%, while NVIDIA shares are up 2.5%. The S&P 500 is up 2.9%.